I noticed that Redfin announced a new housing market update today at the time of this video, which is the 8th of September. They announced some drastically different changes amongst our housing market right now due to the fact that mortgage rates have been increasing greatly. As it's been important to you guys, mortgage rates have increased about 1 percentage point since August 1st of this year. So a big increase in a very short period of time, about 40 days. So with that said, let's go ahead and dive right into this video here. Again, this was announced on the 8th of September. But before that, if you guys are looking for a real estate agent referral, whether you're looking to buy or sell a house in virtually anywhere in the United States, then check out that link below, which is homeandmoney.com/Jason to get started today. And with that said, let's begin today's video. It says here, with mortgage rates reminiscent, keyword reminiscent, of 2008, home buyers and home sellers took a step back during the holiday weekend. It says here, a surge in mortgage rates over the holiday weekend sapped much of the remaining energy out of this housing market. I would add an asterisk here saying that the increase in rates ever since August 1st could have sapped a lot of the energy out of this housing market, and not over the holiday weekend, because mortgage rates have increased about 1 percentage point since August 1st of this year. So a big increase over the last 40 days, not over the holiday weekend, causing this housing market to have these drastically different changes here. Anyways, it says home touring activity took a nosedive, and the share of sellers dropping their asking prices remained near a record high. I have some news to share regarding that, because the share of price reductions has been more or less stabilizing over the past few weeks now. But having said that, this decrease of home tours and also the share of price drops near record highs could be due to the fact that mortgage rates have been increasing over the last 40 days or so. And according to Redfin, as a result of decreasing demand overall, fewer homes sold above their list price than any other time since February 2021, and the average sale price to list price ratio fell to its lowest levels since March 2021. Also, the typical home that sold during the 4 weeks ending September 4th went for 0.3% below its final list price. In other words, on average, home sellers are selling their houses for slightly less than their asking price. Now, this is drastically different compared to the past couple of years, because as it's important to you guys, on average, home sellers across the United States have been selling their houses for more than asking price for approximately 2 years now. But now the tide is starting to change now, because on average, home sellers, or at least for the 4 weeks ending September 4th, sold their houses for less than their asking price. Now, it's clear this housing market has slowed down greatly over the past few months now, and this is causing a lot of home buyers to get more of the upper hand over home sellers in some markets. So let me give you guys a quick example. I wrote an offer here for a client in the Sacramento area a couple of days ago, and we actually got an offer accepted for less than their asking price, and also they're holding on to all their contingencies, their inspection contingency, appraisal, and loan contingencies. 1 year ago, that was unheard of, because houses on average were selling for far more than asking price, and home sellers were getting in the range of 6 to 8 offers on average. And because of that, buyers had to write offers very aggressively for more than asking price, and often waiving their appraisal and loan contingencies, for example. In any case, I want to share that story with you guys, because our housing market has definitely shifted greatly over the past few months, because the spike in mortgage rates, which has caused home buying demand to decrease, and also we're seeing a huge uptick in the amount of houses for sale. But as I report to you guys, the new trend we're seeing right now is some stagnation regarding housing inventory. And in fact, altosresearch.com as well as Redfin is reporting that inventory across the United States has actually started to decrease over the past couple weeks now. So according to Redfin here, it says it seems that the mortgage rate spike and declining demand has discouraged homeowners from entering into the market, because new listings are down 18% year over year. In regards to their comment here that new listings have fallen by 18%, this is a similar trend we have been seeing over the past couple of months, because we've been seeing fewer new listings hitting the market compared to last year for 2 consecutive months now. And because of this, we're not seeing this growth of housing inventory like we once did earlier this year. And according to Redfin's chief economist, Daryl Fairweather, she had this to say: the housing market always cools down this time of year, but this year I expect fall and winter to be especially frigid as sales dry up more than usual. This is exactly what I've been saying as well, because in my personal opinion, we're going to be seeing seasonality of our housing market, where the second half this year, our housing market tends to slow down each and every year. But couple that with mortgage rates of about 6% or over 6% for the last month or so, this is going to cause a pullback in home buying demand. And the chief economist for Redfin goes on to say the following here. Thanks largely to mortgage rates near or even above 6%, potential home buyers and sellers are focusing on the back-to-school season and enjoying the last days of summer rather than getting back into an uncertain market. Okay, let's talk about some early indicators of home buying activity according to Redfin here. It says for the week ending September 8th, which again is today, 30-year fixed rate mortgages, or the average for that, is at 5.89%, the highest level since November 2008. If you actually click on this link right here, it takes you to Freddie Mac's website. If you guys follow the channel, this is based on a weekly survey for rates. So the weekly survey right now is at 5.89%. And by the way, this is based on home buyers paying 0.7 fees or points. So 0.7% in fees in order to get this rate of 5.89%. Again, this is based on rates or the survey results back in Tuesday and Monday of last week. So it's really not an accurate depiction regarding mortgage rates right now. That's why I like to look at Investopedia.com. Investopedia.com looks at rates on a daily basis, just like the Mortgage News Daily. So as of today, which again is September 8th, the Investopedia.com is reporting that rates for people with exceptional credit, of course these are averages, is at 6.31%. Also, according to the Mortgage News Daily, it's at 6.01%. And going back to Redfin's report here, that average rates are at 5.89%, the highest level since November 2008. I would say it depends on your source of this data here, because they're citing Freddie Mac's data, which at 5.89% is the highest levels since November 2008, if you're only looking at Freddie Mac's data though. But when you're looking at Investopedia.com and also the Mortgage News Daily, rates right now at 6.01% are actually less than the rates that we saw in the middle of June, because in the middle of June, rates were 6.28%. So one last thing I want to mention regarding this is that the Mortgage News Daily only provide rates going back to 2009. So the peak we saw in the middle of June at 6.28%, we can't go back to see what was the previous record high. So instead, we actually have to go onto Freddie Mac's trends regarding rates. So their most recent survey from Freddie Mac is at 5.89%. This is far higher than 2018 when rates were about 5%. In fact, you have to go back to November 2008 to see rates this high according to Freddie Mac. Also, no big surprises here, but Redfin's reporting that fewer people are searching for homes for sale on Google. When you actually click on this link right here, it takes you to this website right here, which is Google Trends. This is a website you can go to. You can search for any search term to see the interest in that search term over time. So here's the complaint I have regarding their link that Redfin provides right here, is because it takes you to this website right here, which is worldwide. Now, of course, Redfin only tracks the US housing market, so I'm not too sure why they link worldwide interest for houses for sale. It wouldn't make a difference regarding people searching for house for sale in France, for example. Anyways, you have to change this to the US in order to get the accurate depiction regarding the people searching for houses for sale on Google. Let's look at the 12-month average, or the changes over the past 12 months. So right now, the interest over time is at 85. This is approximately 15 percentage points lower than the same time period 1 year ago. In other words, fewer people in the United States are searching for houses for sale. Redfin also noted that their home buying demand index, which is a measure of requests of home tours and other home buying services from Redfin agents, was up 18% from the low we saw in June of this year, but still down 11% year over year. And here's a chart showing their demand index over time. And this is for 2022 in red. Here's 2021, and here's 2020. So Redfin received fewer requests of home tours compared to last year, starting in April this year. It more or less declined all the way until we hit basically the middle of June of this year. But ever since then, they had some ups and downs. But overall, the trend line has been increasing. However, though, they're still down 11% from the same time period in 2021. They also noted that touring activity amongst all real estate agents, not just Redfin agents, has also been going down as well. So here's the latest trends we have from showingtime.com, and this is for the 7-day average ending September 7th of this year. So take a look at this because this is pretty eye-opening here. So for the week ending September 7th, we've had 41.4% less home tours in North America by all real estate agents, using showing time, I should say, compared to the first week of this year. So a big decrease compared to January 1st of this year. And compare that to 2021, we only saw a 1.5% decrease compared to the first week of 2021. Obviously, it's entirely normal to see a decrease of home tours around the holiday season. So this is obviously during the Labor Day weekend. We also saw this during the July 4th holiday as well, where less people are going on home tours across North America. But what's really interesting though is that we're seeing less home tours this year compared to the first week of January, which January tends to be a very slow time of the year for home tours and home buying activity in general. We've been seeing fewer home tours ever since July 14th of this year compared to January. On top of that, mortgage purchase applications, the amount of people submitting applications in order to buy houses right now, was down 1% week over week. And this is according to the Mortgage Bankers Association, or the MBA, and was down 23% from 1 year ago during the week ending September 2nd. And by the way, as I mentioned in my previous video, if you exclude the onset of this pandemic, which of course was April 2020, the current levels right now for mortgage purchase applications are at the lowest levels since November of 2016. And with that said, if you guys got any value out of today's video whatsoever, then please hit the like button. I greatly appreciate that. Hope you guys have an awesome day and look forward to seeing you on the next video.